Before I start this practical question, let me remind you the accounting cycle we are applying in this question. First of all, transactions are converted into journal entries, and on the basis of journal entries, ledger posting is done, and after ledger posting, trial balance is prepared, and on the basis of trial balance, final accounts are prepared. Let's take the previous question, and I'm going to make two accounts, machinery account and depreciation account. Mainly two accounts or ledgers are involved in all these journal entries. So first of all, I strongly recommend you to make the machinery account. So on the basis of journal entries, I will make machinery account. You know, machinery is an asset and all assets are real accounts. And all assets carry debit balance. That's why they are shown on the debit side of balance sheet. I am to say on the side of debit balances means asset side. So machinery account always carries debit balance. If any account carries debit balance, it means the opening balance is always on the debit side. Means balance BD is always on the debit side. If the opening balance is always on the debit side, naturally the closing balance will always be on the credit side. Means balance CD you will always find on the credit side of machinery account. Or in other words, I can say whenever you put the amount on debit side, it will increase the value of the asset in the balance sheet. If you put any amount on credit side, means if you credit machinery account, it will reduce the value of machinery. And another thing you must know, that depreciation hits in two ways. Number one, it reduces the value of the profit of the year, and number two, it reduces the value of the asset. In all these questions, I am assuming the asset is machinery. So I am going to prepare machinery account. So plus items on debit side, minus item on credit side. So first of all, the journal entry was on 1st April 2013, machinery account debit to cash account. It means machinery account has been debited by rupees 10,000 on 1st April. So it has been debited in the journal entry, means it will be posted on the debit side of machinery account. So on debit side on 1st April 2013 to cash 10,000. It will be great if you write down purchased in the inner column in the bracket, so that your solution or your question becomes more explanatory. Then come to the journal entries on 31st December 1913. The journal entries depreciation to machinery. It means the in journal entry machinery account has been credited. So in ledger posting, the machinery account will be credited by 2,250. Machinery account will be credited means this amount will be posted on the credit side of machinery account. So on 31st December 2013, by depreciation 2,250. In the inner column, in the bracket, you must write down 9 months, because this year the depreciation has been provided for 9 months, because during this year the uses of the machinery was only for 9 months. And then on the same date, I mean to say 31st December 13, on the credit side, by balance CD 7,750. This is the balancing figure. So total on both sides 10,000. Balancing figure means the figure you provide to balance both sides. Now this by balance CD will become to balance BD on the debit side. So on 1st April 2014, to balance BD 7,750. Then on 31st December 2014, have a look at the journal entries. The journal entry was depreciation to machinery, rupees 3,000. It means machinery account has been credited by rupees 3,000 in journal entry. What it means? This machinery account will be credited in ledger posting. Machinery account will be credited means amount will be posted on the credit side of machinery account. So by depreciation on 31st December 2014, rupees 3000. Now, by balance CD, what will be the amount? This is the balancing figure, because the total on debit side is 7750. On credit side, it's only 3000. So you have to supply 4750. Now the total on both sides, 7750. Now this balance CD will become 2 balance BD on 1st January 2015. 2 balance BD, 4750. Now come to the closing. On credit side, 31st December 2015 by depreciation, rupees 3000. Then by balance CD, 1750. Totals on both sides, 4750. In this way, the machinery account has been prepared up to 31st December 2015. Now prepare depreciation account. I strongly recommend you, if you are instructed in the question that prepare journal entries, machinery account and depreciation account, or the examiner may ask you, draw journal entries and prepare necessary ledgers. And the necessary ledgers in this chapters are only 2 accounts. They are depreciation account and machinery account. But I strongly recommend, first of all, you should prepare machinery account. Then you should go for depreciation account. Now, this is the turn of depreciation account. Let's talk about depreciation account. Depreciation is an expense. All expenses and losses are called nominal accounts. It means depreciation account is a nominal account. The feature of the nominal account in ledger posting is there is never ever balance CD of the nominal accounts. Of course, there are balance CD for the purpose of trial balance. But in these questions, you won't keep any balance CD, means closing balance. All closing balances must be transferred to profit and loss account. So let's start ledger posting for depreciation account. So first of all, the depreciation account was debited on 31st December 2013. So depreciation account has been debited. It means in ledger posting, the depreciation account will be posted on debit side. Means you have to supply the amount on debit side. So on 31st December 2013, to machinery account 2250. It will be great if you write down 9 months in the inner column, so that your solution become more explanatory for your examiner, or you can say you can impress your examiner by giving all these small details. Now come on the credit side. 31st December 2013. You have to close this account. Means you have to transfer the balance to profit and loss account. So you can write down by profit and loss account 2250, and the total on both sides 2250. There is no balance CD, no balance BD. For nominal accounts, there is never ever balance BD. Means you will never ever find opening balance in nominal accounts. Depreciation is a nominal account, so there is no balance BD or no opening balance. Now, come on 31st December 2014. Have a look at the journal entries. Depreciation was debited by rupees 3000 in the journal entry. In the same way, depreciation account will be debited in ledger posting. Debited in ledger posting means you have to post the amount on the debit side of depreciation account. So to machinery, rupees 3000. Now come on the credit side. The date is 31st December 2014. By profit and loss account, rupees 3000. In inner column, you can write down transfer. Means the balance has been transferred to profit and loss account. Total on both sides, 3000. Now, 31st December 2015. Depreciation account has been debited in journal entry by rupees 3000. So you have to debit depreciation account in ledger posting. Means you have to supply the amount on debit side of depreciation account. To machinery, rupees 3000. Now on credit side, on 31st December 2015, by profit and loss account, rupees 3000. In bracket, write down transfer. Totals on both sides, rupees 3000. In this way, for 3 closing, I have prepared depreciation account. One thing more, I would like to remind you, balance BD or balance CD, I am to say closing balance or opening balances, are always for real and personal accounts, not for nominal accounts. All nominal accounts are transferred to income statement and all real and personal accounts are transferred to balance sheet. I mean to say the closing balances of real accounts and the closing balances of personal accounts, they are always taken to the balance sheet via trial balance.